G'day folks, Jim here from Orchard Forex. It's Saturday the 21st of November. Well, markets remain pretty indecisive as traders struggle to find any clarity over the contradictory headlines regarding COVID lockdowns and vaccines. On top of this, we now have a split between the US Treasury and the Federal Reserve after the US Treasury Secretary said on Friday that the emergency pandemic lending programs will not be renewed at the end of the year, which is the opposite of the Fed's wishes and causes traders to worry about the pace of future economic progress. As if that wasn't enough, we still have no real clarity over the outcome of the US election as Trump plays hardball in denying Biden access to daily briefings, all making for pretty confusing times in the US really. Some possible good news came through from Europe on Friday though. The progress in Brexit negotiations has obviously been very, very slow and a never-ending issue. Although some upbeat headlines from the EU on Friday suggested that significant progress has been made in recent days. So we'll find out more about that in the future. And then without further ado, we'll go and have a look at the charts now. Although before then, I'll take a quick look at the trend table, where, as you can see, there's a fair bit of blue on the table, particularly in the FX crosses, and this shows the general indecisive nature of trading at the moment. No one's really quite sure what to do. If anything, sterling, the Aussie, and the Kiwi all look mildly positive. It should be said that all of those, though, as well as the euro, are coming up against some pretty strong resistance on the weekly charts. We'll go and have a look at those in a moment. As far as stock markets go, well, we had a bit of a downturn in the last hour on Friday's trade, but nothing serious. But the markets look as though they're turning a little bit neutral at the moment. The Aussie, I still like the ASX higher, but that's not going to go up on its own, and we do need to see higher US markets. And right now, they look as though we might be into some sideways trade, particularly as we're going into a long weekend in the States. US Thanksgiving on Thursday. So it might be quite a sideways market until then. There's not an awful lot on the calendar, as I'll show you. The metals, well, they're not doing an awful lot. Oil is trying the top side, but it's coming up against very heavy resistance. And as far as the crosses, well, I'd leave those alone. Aussie Kiwi, that might have further downsides. But in the meantime, that's in the medium term. The shorter term charts look slightly more positive. Anyway, without further ado, as I say, we'll go and have a look at the charts now. Okay, so here we have a daily chart of the euro. And as you can see, really for the last 2 or 3 months, going back to September, probably even before that, I guess, we've been in this sideways choppy range. And I don't think we're going to move very far from it in the week ahead. So all things being equal, I would be looking to sell in the sort of 119 and a half area, and probably buying it back down around this sort of 117 and a half area. If we get the wider range, we could see it dip down to 116. Don't really see that, and I don't really see it going above 120 in the near term, particularly in the coming week. It wouldn't surprise me if we really don't do an awful lot. We have got the PMIs out on Monday. They may create a little bit of activity. But really, that's the daily charts are showing slightly positive bias, perhaps. The weeklies are looking pretty neutral, and as I say, this has been going on for quite some time. This sideways range. Eventually, it wouldn't surprise me to see a push higher on the euro, but I suspect that possibly until the end of the year, possibly until Joe Biden is firmly in the White House, we're not going to see any major movements in the dollar itself. If we move forward, sterling is pretty much the same. Actually, I should just show you on the monthly charts here that the euro is coming into very, very strong resistance. Now, this applies on all the major currencies, and a break of the top side, so 120 and a half or so, would allow us to move higher. At the moment, I think that's premature. If we go look at sterling, much the same applies here. So as you can see, this is a weekly chart. If I just squeeze it up a little bit, going back to 2014, we are coming up against this strong resistance. I think if we do get some good news out of Brexit, we could see sterling take the lead higher. But until then, I think we're probably still range bound. The weekly charts are looking slightly positive. The dailies possibly as well, but without any real positive news. I think sterling will just trade in this sort of 133 to 131 range for the time being. If we just go and have a quick look at the 4-hour charts, we are coming up against FIBO resistance here of this move down, so that's creating some headwinds. But as I say, if we do see some positive Brexit news, then we might see a move back up towards the top side. The longer term charts also look pretty similar for the Aussie and the Kiwi. We're just going to have a quick look at once again, long term resistance stretching back to 2014. If this Aussie can take out this sort of 73.5, 74 level, then I think we can head a bit higher to where this previous high here was, what was that, sort of 73.80, and above there we've got the FIBO resistance that comes in at about 75, just above 75 cents. I still think that's some way off. I don't really think we're like to get there. We are sitting above the 200-week moving average for the sort of third week in a row, so that remains positive. And I think we probably need to go somewhere. That's 72.30 or so, 72.40. That should be your support, and stop losses should be left below there. As you can see from this 4-hour chart, though, it's doing much the same as the euro. In terms of the Aussie, we've got a top at 73.40 and a base or down around here's that 72.40.50 level, and beyond there down at 72.20. So I don't really think we're going to move too far out of that. There's not an awful lot of data to come out of Australia this week, so further consolidation looks like to me. The 4-hour charts are pretty flat. So I'm not really expecting too much, at least early in the week. The same applies to the Kiwi. If we go to the Kiwi, so once again here we have a weekly chart of the Kiwi, and we're coming up against strong resistance here as we approach 70 cents. If we do the weekly charts, it has to be said, do look positive. Coming back nearer home to the daily charts for the Kiwi, as you can see, we've had this reasonably strong uptrend. It's performed well, particularly against the Aussie. But we are now coming up against this resistance at 70 cents. A bit of a pullback wouldn't be surprising really to me. The dailies, they are pointing higher, but maybe showing a bit of bearish divergence, nothing major. So I'd still be a buyer of dips, and I think eventually we are going to look at this 70 area and possibly even take that out. But I'm not sure that's going to happen this week. So I think more range trading in the sort of 70 to sort of 68.5 range will probably be the order of the day. If we go forward and look at the stock markets now. Okay, so here we have a 4-hour chart of the S&P. The S&P, that does come off a little bit at the end of Friday trade. Nothing really too dramatic, but it does seem to me that we could drift a little bit lower early in the week. The 4-hour charts are not telling us an awful lot. The dailies do look slightly toppish, and it wouldn't be surprising to me to come back down and meet this resistance turn support at around about 3,500. This kind of pivot line, and if we go through that, then I guess we can come back down to this 100-day moving average. That's some way off, and I don't really think we're like to do that at this stage. But the dailies do look a little bit heavy, and we've also got this bearish divergence on the daily charts, which suggests to me that we might, this was an all-time high last week. I think that might have been a one-off as we tried to break through this very long-term resistance. We go and look at the weekly charts. As you can see, that goes way back to 2008. We tried to break through the top side, didn't quite make it, and now we are consolidating. The weeklies, it has to be said, are overbought, as are the monthlies as well. So and we're seeing further bearish divergence here. So I actually prefer the downside slightly for the coming week, but once again with US Thanksgiving, we may be in for a quiet period. We could actually see a little bit of profit taking ahead of the Thanksgiving. So as I say, I'd probably rather be short than long, but with a tight stop loss placed above last week's all-time high. I've been following the ASX fairly closely recently. I really like the ASX, and ever really since this breakout of this long-term consolidation. So we had this sharp move up, and ever since then we've squeezed higher and higher. Now the dailies still look positive, and I do like the ASX for further gains, but they're not going to go higher on their own. And if we see a downturn in the US indices, then the Aussie's going to find it pretty hard to move higher. The weekly charts though still look positive, and I'm wondering if this is actually a bull flag here with the consolidation we saw here. So potentially we could get another leg higher, taking us back towards the all-time highs here seen ahead of the pandemic in February. That's some way off, but I do like to buy dips in the ASX. Going home towards the shorter term charts, I would keep a stop loss here though under this sort of 65.20 level early in the week. If we go down there, we might see further consolidation down below 6,500 and above 6,400, and that wouldn't be unhealthy, I think, in the longer term. It does look as though it might be struggling to make further gains at the moment, but overall, once again, as I say, I prefer to buy dips. Moving along to gold, which I've found far too difficult recently. I'm not being involved, but we are seeing this descending trend resistance. We've got major support here. We really need 1850 to hold, because if it doesn't, then we could see quite a dump. I've not been bearish gold at all, really, but it doesn't look as though it really wants to set the world on fire on the top side. Maybe it's something we've got to wait for next year. If we see a weaker US dollar, gold will reprice itself higher. But in the meantime, it does look a little bit heavy. The daily charts, equally, they're looking slightly heavy. We've got support. We've got support here. This sort of 1850. We're sitting right on it, really. 1850, 1860. If we break through there, we can go back to 1800, where the 200-day moving average sits. But I'd stay out of gold. But if anything, albeit it's against my natural sentiment, but I do think it does look a little bit heavy. Oil. Let's have a quick look there. It's not doing an awful lot. It did try the top side again on Friday, but as I've said, over the last 6 months, we've got this huge resistance sitting right above us, and it doesn't appear to me that we're going to be taking that out anytime soon. We're waiting on OPEC announcements regarding possibly postponing its scheduled output increase when they get together at the end of this month, I think it is, or maybe the 1st of December, I'm not quite sure. In the meantime, the daily indicators do look slightly positive. So we might see a test of 43, 43 and a half, but I don't think we're really going above there. Having said that, if we saw a dip back towards $40 a barrel, I think I'd probably be a buyer there. So that probably covers it for the major things that I watch at the moment. We'll have a quick look at the calendar. Okay, so if we start off here with what's happening on Monday, we've got the Q3 New Zealand retail sales, but the main event really will be the flash PMIs that are due globally, starting with Australia, then through Europe and through to the US. Tuesday will be pretty thin on the ground. The Australian trade balance looks like Kuroda's going to be speaking. Wednesday, we've got more central bank speakers, RBNZ governor, or we've got the data to come from the US. That's because Thanksgiving will be on the Thursday. So the highlight of those will be the durable goods orders. We got the GDP coming up and various other things, the Michigan consumer confidence, new home sales. There's a whole swathe of data really coming out of the States, and that is because of the holiday on Thursday. Thursday itself, we also got the FOMC minutes late on Wednesday. They shouldn't have too much effect on the market because the Fed really did very little apart from to its underlying commitment to supporting future economic growth after the pandemic. And then Friday, really, we've got not an awful lot out at all. Tokyo CPI, that's really about it. The US will pretty much be out as well, although they are back. I think the stock markets might be open on Friday, but certainly it's going to be a pretty thin week. And overall, more choppy sideways trade would not really surprise me. So until next week, have a good week's trading, and we'll talk to you then. Cheers.